Boom. Come on, Naeem. Hold on. Let's do it. Ready? Ready for this? You ready for that? Mr. Producer. From a new location. Naeem. Come on. We were in Miami. Then we make it back from Miami. We get back to the home base. We rip one live stream from the home base. 2 live streams from the home base. All right, here's the camera. Hold on. We got to make sure the camera's cracking. And now we're in Vegas. Now we're in Vegas, baby. But we're still coming live. We're still bringing the juice because the markets are still hitting. Things are still happening. Hold on, let me yeah, there we go. That's a little bit better. This fucking camera. We got it. There we go, Naeem. We got to talk about markets, right? Because the markets never close. Crypto's 24/7. Equity markets, you can take breaks on the weekends. You take breaks after 5 o'clock. But crypto's the world for the real hustlers. Crypto's the world for the people who want to make exuberant amounts of cash 24/7, 7 days a week, because there are no days off. There are no holidays. There are no, I don't want to. No, 24/7, baby. So it's good to be able to get to touch base again after Thursday's episode because we had some pullbacks take place, which was inevitable. We had a nice bounce back. We had a nice rally off of that 3-month puke. And then we bounce back. We get back into the main range in Bitcoin. Now we're starting to see a little bit of a drawdown, okay? So naturally, how are we going to play this? Well, we got to say, all right, is this just going to be a natural pullback? We're getting a little pullback, and then we continue higher, or do we start to range in the range again? Or do we start breaking down from here, get one more little exit pump, or was that the exit pump? We break down from here. That's what we're paying attention to. We got to play the odds. We got to play the numbers. We got to do what's profitable in the long term. If we make the right decisions on a long enough time frame, we become incredibly profitable. We make a shit ton of money. Okay, so markets, right? Let's take a look at the S&P. Okay, S&P will be a good thing to take a look at today, and then the VIX, and then how that's correlated to Bitcoin and crypto, and then we're gonna jump into the boys club because I have the title of the stream. Where do Pepe, Brett, Andy, Wolf go to the cycle? So we got to take a look at some cycle targets where we're thinking this thing heads. So let me do a little Mr. Producer. We'll go to extra scenes. Okay, we're gonna do screen capture. All right, check this out, Naeem. Check this out. Pull this up. Pull this up. Screen capture. Here it is. And we should be good. So let's hit done. Make sure we're all good here, Naeem. Yeah, we should be fine. Yeah. Okay. And then this time you guys are actually going to be able to see the chart. Okay, beautiful. So we're on the go. We're on the laptop trading view. All right, so here's Bitcoin. We've been talking about this. Let's actually head over to equities land, huh? How about we head over to equities? I know everybody's favorite, right? The S&P. So let's take a look at this. All right, I've had these levels drawn out for the past couple months at this point. All right, these are the major demand zones, the major supply zones as we've broken down, and this is how the S&P has been playing. Okay. This is on the weekly time frame, so you get to see on a large enough time frame what's actually happening on a bigger picture basis, okay? After we had this downturn from July through October in 2023, the S&P was effectively up only this entire way until we hit our highs in December, okay? So here's what we got to take a look at. We tried to break out 1, 2, 3 times, and we failed to do so. So that inevitably led to our puke here due to the tariff news, okay? So everything is correlated to equities. Everything has to do with where the S&P is going, right? Crypto, altcoins, everything is in some way correlated to the alpha asset, which is the indices. So we get this downturn in indices, so we obviously get the rip down in altcoins. They draw down. Bitcoin actually held up incredibly strong during that downturn, but everything came down because equities came down. Okay, people became bearish. So we broke down through these levels, and as you see here, we lost this level, so then we got a big little wick down here, then wicked all the way down here into the supply zone. We tagged it beautifully. It was demand at that time. We bounced off of our demand at that time. This little wick right here hit off of our overhead now supply. Okay, so we reject here, We lost it. The next week we came down, we puked again hard, all the way down into this demand zone. Okay. The next week, we had a quick pump back into our supply, drew all the way back down past this demand zone and almost tagged this demand. Fortunately, we saved it and we closed up here. Okay. Then we rejected again off of the overhead supply. Then we just chewed through this supply. So why am I going over this? So we got to understand where S&P's at to understand where Bitcoin and the rest of the market's at. We reclaimed this supply, it looks like. Okay. So now we could change this to demand. All right. So we closed the weekly above. Here's now our next weekly candle. We're above this demand. Okay. So the way I have this drawn out is it's likely that we see, in equities at least, a push up higher into this overhead supply, which would cause the inevitable pullback to retest this demand zone. So we broke through it, which was resistance originally. We broke through it, we come back down, we retest it, turn it into support, and then push for a breakout. This move here up to this breakout needs to lead to something like this for the cycle to continue, okay? But that's only going to happen with SPX reclaiming this supply level, okay? So we got to chew through this last piece of supply, okay, where we had this price action up in here, to then make another push for a breakout. We make the breakout, we're cooking. So that's where we're at on SPX. So this is what I'm watching for. I'm watching to see this supply region either get eaten through or we reject off of it, come back into this demand zone, and we have to hold this demand. We have to hold this demand on the pullback and push up higher off of that, okay? Now, granted, with the rate cuts that are eventually coming down the road, that tells me that there's more reason for me to believe that there's going to be more bullish conditions as opposed to bearish, okay? So I'm expecting something like this to play out. Now, because equities is the alpha, right? People ask me, well, why would you hold Bitcoin or altcoins or crypto instead of just holding the S&P? If the S&P virtually is up only over time. If you look at, if we really shrink this down, let's do it like this. Right? Here's COVID, but effectively up only over a long enough time frame, right? It's just always going up, going up, going up. Here's the other big nuke. 2009. Okay, this was the financial, the housing market crash, right? But virtually up only outside of those events, okay? So why would somebody hold Bitcoin in altcoins over in alpha as in the S&P? So the way that I explain it to people is I'm just playing the highest levered position that I can possibly size into. Okay, so what does that mean? Equities effectively is a scam, right? Why do everybody have a 401k with their company that they invest into for their retirement, their entire careers? They're always setting money aside from their paychecks. Why does every company across the country offer something like that? And why are there so many incentives to invest into these Roth IRAs, 401ks, all these different investment vehicles? What's the incentive for you as a consumer to do that? Well, the people who have their wealth hold their money inside of the S&P, these indices that you invest in via proxy through your 401ks and Roth IRAs. These individuals benefit from that because you're going to appreciate the price of their assets over time, therefore preserving their wealth. Now, the idea is it would preserve your wealth as well. But essentially what you're doing is you're offering the perma bid on those indices. You are the perma bid on those indices that allows them to go up only over time, okay? So that's why you're basically suckered into doing this. Again, is it bad? Are you going to make money? Yes. Is it bad? No, not necessarily. But the way that I look at it is, okay, what's the absolute best way possible to compound my wealth over time? If there's a faster and better way to do it, right? It's not get rich quick. It's not make money fast by taking shortcuts. It's just simply, can I use the same amount of time, the same amount of capital to get more multiples on my money? Is that possible? Yes, it's possible via crypto now, okay? So what do I mean by that? Bitcoin in crypto is now tightly correlated to the S&P, to indices, to equity markets. As equities are ripping or moving up, so is crypto and Bitcoin. So why would you hold it over indices? Because as indices draw up 15%, Bitcoin will go up 50%, right? It's just a simply higher leverage, higher rate of return. So let's take a look at the low in October 22. Let's do something here. I'll show you. This is how we do the investing, right? To the high, you got 73% move on the S&P, a little bit more, from the low in 2022 bear market, okay? So if you had bought in the Pico low and you shoved here on the S&P, you would be up 76%. That's not even double your money. Now, sounds great if you have a lot of capital, right? It does, for sure. But let's take a look at Bitcoin in that same time frame. So this is October 22. Let's actually do it like this. Here's the reason you hold them. Look at how much higher lever of a play this is. So let's do vertical line right here. That's the low. And then the low on Bitcoin was down in here. Say from here to its all-time high. And there's your answer. Bitcoin is a stable enough asset. Bitcoin is an asset that has been adopted by institutions at the highest levels with ETFs, all the largest financial corporations in the world investing in Bitcoin, offering these ETFs. It's a real currency. It's a real investment. Well, look at what happened in the same time frame. You could have invested 100 grand into the S&P and returned 176,000 at the all-time highs. So you'd be up 76,000. If you put that same $100,000, that same 100,000 in the same time frame into Bitcoin, you would be up from the low over 6x, 533%, over a 6x. So your 100,000, instead of turning your 100,000 into 176,000, you would have turned your $100,000 into $633,000. Okay. So now you understand why we play levered positions. Okay. Who's this guy saying? Get out of here. So that's the reason you hold beta. Okay. So whenever individuals ask me, so why don't you hold, typical indices or S&P instead of just, but I do buy individual. I would buy individual stocks, but I don't hold any indices. Why don't I? Well, because if I understand the relationship between the S&P and Bitcoin and how they're correlated, then I can go ahead and outperform indices, still size into Bitcoin effectively, and make way more money than I would have just holding an index fund. Okay? The only reason, in my mind, as an investor, that you would hold an alpha over a beta is if you cannot effectively size into the beta asset, meaning you have too much capital, too much wealth to be able to park inside of an asset where it makes sense for you to do so. Why is that? Well, if you have a shit coin, a meme coin that's a $10 million market cap, it's tiny, and you have $1 million that you're trying to size into this coin and try to buy $1 million worth, by the time you're done buying that $1 million worth of coin, you've already increased the market cap significantly on yourself, and other people are just dumping on your head. Meaning that by the time you're done clipping in that $1 million, your average cost is going to be so much higher than where you started buying at, because you're yourself influencing and increasing the price on yourself by buying more of the asset. So that would be the only reason that you would hold an alpha over a beta if you know they're correlated. Well, fortunately, with the amount of capital that I'm investing with, and I'm sure you're investing with too, Bitcoin, altcoins are plenty big enough for us to be able to size into effectively. Now, there are shit coins that are small, like Andy and Wolf, that I could not put my entire portfolio into because I simply would just move the price too much. But outside of that, outside of very small caps, everything else you can size into effectively. So why would I not hold the beta? Why would I hold the S&P if I know the S&P is going to be up only, well, if Bitcoin's directly correlated to the S&P and the S&P's up only, then if I just buy Bitcoin whenever it's down and I know the S&P is down, I know that to the upside, as equities are topping out, up 76%, I'm going to outperform equities and do a 6x. Huge difference, multitudes of a difference. That's $1 million into 6 million as opposed to $1 million into 1.7 million. 1 million into 6 million as opposed to 1 million into 1.7 million. That's the difference between the S&P and Bitcoin off of the lows. That's why you hold the beta. Okay, so the only reason that we track the S&P and equities is because this is going to give a signal as to what's happening in the broader market. Okay, understand? So this is the correlation between the two. This is how I decide on what I'm going to invest into. So now let's take a look at this. Anyways, you get the point, though, on the S&P. We got, oops, what the hell? I have no idea what I just did. What the fuck did I just do, gentlemen? I'm on the desktop version, not the trading app. Hang on a second. I'm going to do a little Mr. Producer real quick. All right, let's see. So we'll do live scene transition. And then let me fix this real quick. What the hell happened here, Harry? Okay, I got it. All right, so let's go back to Bitcoin. Boom. All right, share my screen. Mr. Producer. Boom. All right, so we're back. So now let's take a look quickly at Bitcoin. We'll go over this, and then we're going to go over the meme coins, okay? What everybody's been waiting for. Okay. So let's go on a lower time frame. Let's go on the daily. Let's prop this up a bit. So here's where we're at with Bitcoin, okay? So we reclaimed the macro range, okay, up top where we distributed. So one of two things are going to happen here. This is what we got to watch for. We're still within the range. We front ran this mid-range, and as we had prophesized, the fixed range volume profile was where? We've had this drawn out for months. For this range, the breakout of this move, the fixed volume, that naked point of control, was right here at 96,300. Well, look what we did. We pumped all the way up into it. We came back down and lost it as support, and now we're starting to puke back down. This was going to be the sticky area that we were talking about. And guess what happened? That's exactly what happened. So who could have foreseen? So what you're going to see now is a pullback. So I'm going to expect one of two things here. Either we pull back into this general cluster right into here, and this is basically where we bounce at, this demand zone, okay? We either bounce right here, or if we lose this level, this demand zone, this price action right here, we're going to come back down to range lows, okay, which is going to be about 91, 92,000. This is where we're going to have to be very cognizant of what's happening. If we lose range low, you're looking at a continuation into a bear market. That's just the reality of the situation. You're going to see something like this. You're going to see this, and then into here, maybe save it a little bit, boom, retest the bull market trend, and then you nuke. It'll be something of that nature, okay? Certainly, we hope that doesn't happen. We're not in the camp that is going to happen, okay? Here's what we want to see happen. So pay attention to this. So let's say we don't lose the range low. As soon as you reclaim a range, you assume that you're going to hit range highs. But at some point, you're probably going to test range lows. So we come back down. We're likely going to get a pullback into here if this doesn't hold. Okay, if this holds, yeah, we get a continuation up here like that. this region right here, this bit of price action, these daily candles don't hold, and we come back down to range lows, this is where you want to be paying attention. Do we bounce and head back up to range high and cycles back on, bull market's back on, it's clear we're bullish, we're fired the fuck up? Or do we hit this level, maybe bounce a little bit, and then bang into our bull market trend, lose it, retest it, and then come back down? That's what we have to be cognizant of right now. So we must hold this 91.3 range low and hold this bull market trend that we were chopping up on over here before we got this relief bounce. Okay? That's where we're at on Bitcoin. Now, granted, everything sticks. We continue our trend. We make another rip up higher, right? Considering that that's the case, what's going to happen to the boys club? Let's take a look. Well, ETH is holding its range as well. That's good. ETH is actually holding up a little bit better than Bitcoin. So we're back in the range reclaim. Let's get this off a log. Yep. We broke the downtrend on ETH. Love that. So let's look at Pepe. Okay. Let's put on the Pepe market cap chart because we want to talk in terms of market cap. Okay, here's the market cap chart. Right now, the market cap on Pepe is 3.33 billion. Okay? This is how we floored out on this chart. ETH is down bad. Altcoins are down bad. Pepe has this beautiful demand zone right in here that we've been playing within. Okay? Every time we kind of tag and come back into it, this is where we pump off of. Okay? So Pepe, you probably don't see it come back down that much deeper into this demand before we rip it again. So if we're at a 3.3 billion right now, what's it going to take to get us to either new all-time highs or to that $50 billion target? Let's throw some fibs on this thing. If we get ETH just to hit back up to 5,000, the previous cycle all-time highs, that's what's going to get Pepe to break out to new all-time highs. So let's see. Do we have the... Yes, we do. Professional. So let's do... Get rid of that. Fib retracement. MA, we'll get rid of that. Okay. Get rid of this. So I'm going to show you guys how to do the fibs on this. So the fibs on Pepe are going to give us our cycle targets. This is how I'm looking at this. ETH goes to new all-time highs. No, not even, excuse me. ETH goes back up to 5,000. Pepe goes to new all-time highs. Okay, so let's look at this on the weekly, actually. Okay, so here's our range. The range I have drawn out is from the bottom of this wick where this chart starts, tagging beautifully on the 1.618, just barely getting above it before nuking back down. Clear mid-range here, right? We tag the mid-range here, reject, or excuse me, top of the range there, reject, lose this part of the top of the range, we got to nuke all the way down, okay? So we already broke out and hit the 1.618 on Pepe. Where's the next fib at then? On a linear scale, the next fib is at 16.5 billion, okay? So here's what I want you to understand. Pepe ripping a 10x from here is not at all out of the question, at all. It's at a 3.3 billion right now. So to get a 10x would be 13.3. So it'd be less than that 2.618 fib. How do we get up there? We just need ETH to get back to last cycle's all-time high. So not 4,100 by 5,000. You see ETH go to 5,000, which is not too much to ask for this cycle. So that means it doesn't even make new all-time highs. You're going to see Pepe up at this 2.618, at least. Okay? That's a 10x from here. I'm trying to put this into perspective for you, for those of you who need to position your portfolios and you're looking to capture the upside on this move. That's a 10x on Pepe from here. 10x on Pepe. If you really believe in ETH outperforming and having an ETH season and it's going up higher than its previous cycle all-time high, then you're going to see Pepe do something more like this. Okay, you're going to see the 1.618 play, which would be 19 billion market cap. Okay. And then the next fib on the log would be 90 billion. Now let's put another set of fibs on here, but no, see, they're backwards. Hold on. I'm going to do it this way. This is going to be the top. Pull this down to the bottom. Let's do this based off of linear. Okay. So this is called fib confluence. Where's our fib confluence? Okay. So there's clearly fib confluence right in this range. Okay. All up in here. This whole cluster makes sense for a target on Pepe. Because you have the linear 2.618 right there at 16.5 billion. You have the logarithmic 1.618 at 19 billion. You have the linear 3.618 at 22.22 billion, and then the 4.236 on the linear at 25 billion. So that right there is huge fib confluence. It's 4 sets of fibs right all in the same area for the next target. So if you get ETH, just to go back up to previous cycle all-time highs, which we haven't done this cycle yet. Bitcoin, you got to think about this. Bitcoin has already broken out its previous cycle all-time high. It broke it out of its 4-year reaccumulation range. It's at new all-time highs, up over 2x. ETH never even broke, it never even touched its previous all-time high. It still hasn't even got to its last all-time high. If ETH just gets back to 5,000, the price it was back in 2021, you're going to see Pepe up in this region. So that's going to be well over a 10x from where we're at right now, okay? Well over a 10x, close to a 20x, okay? So that's on a move from ETH back to previous cycle all-time highs. If you get ETH to actually break out and go to 8,000, 9,000, 11,000, 15,000, then that's where you're going to see something similar to the 2.618, that 90 billion play, which is the market cap top on Dogecoin back in 2021. So these targets aren't unrealistic. It's all strictly dependent on, does the S&P continue to move higher the rest of this year? Okay. And does Bitcoin hit new all-time highs again, followed by an ETH season where ETH BTC is outperforming and you're actually seeing a pump there. So that's what I'm looking at on Pepe. I'm looking at Pepe saying, okay, I would expect with the move on ETH back to the previous cycle all-time highs to get new highs on Pepe up in this region, anywhere between 16 and 25 billion. Now, that is a big range to play within, but I would expect at least the 1.618 on the log, the 19 billion, okay? So you're going to see that kind of move on Pepe. Well, if Pepe runs a 10, 12x from this level right here, a 14x, Brad's going to do a 20x, Andy's going to do a 30x, Wolf's going to do a 40x. Not exaggerations at all. That's simply how they play. That's how those assets are going to move. If Pepe moves like that from these levels, that's how those assets will move, because they're simply levered Pepe. Why do we hold Pepe? Why do we hold Brett, Andy, Wolf? Because they're just levered Ethereum plays. It is us betting that Ethereum is going to go up, but as opposed to getting a 2x on Ethereum, let's get a 10x on Pepe. Let's get a 20x on Andy. Let's get a 30x on Wolf. That's the leverage game that you're playing by holding these beta assets, right? So that's where I'm going to see Pepe going. Now, there was going to be something I was going to say with something to do with equities, I was going to say. Oh, yes, I know what I'm going to show you, okay? So here's the other piece of alpha, Okay, we've talked about this chart before, but I drew something different on it that I want to show you guys. So this is going to be BTC divided by NVIDIA. Where is it at? Do I have it here? I'm going to have to pull it up. Okay. I drew this chart in the Discord, and I put it in the Discord. So let me see where we're at here. Okay. So this is this BTC NVIDIA pair. We've been tracking this because there's alpha in this. Every time that this chart has broken out to these blow off tops, we've seen Bitcoin and crypto top. Okay. So it's basically an indicator. When this chart goes up, Bitcoin's outperforming NVIDIA and vice versa. Chart goes down, NVIDIA's outperforming Bitcoin. It's a pair trade. So the reason you watch this is because this is going to show you the rotation of capital from large tech stocks, the biggest companies, market cap companies in the world, the rotation from things like NVIDIA into riskier assets as in Bitcoin. That's how you know altcoins are going to start outperforming and the cycle is likely to top soon. So when this has a blow off top, that calls a cycle top on crypto. So what you've noticed here is you had this cycle top, you had this one in between. Yeah, this one in 17 cycle, this one in 21 cycle. We haven't had any type of blow off top at all on Bitcoin and NVIDIA pair. But what did we have? For the first time in this entire downtrend since the last cycle top, which was in 2021, okay, on Bitcoin, this has been down only for the past 4 or 5 years. For the first time, we set a low here, a bottom, and we're trying to curl out of it. So here, right, what you did is you had a bottom, you kind of came up, and then you came back down, set a lower low. Same here, you know, it came up, lower low, right? Everything's just been a downtrend. Here, this is a little bit different, okay? You're seeing Bitcoin hold up stronger against equities, NVIDIA, and these large caps. You're starting to see this trend trying to reverse. Well, what does that mean? It means we're gearing up for the best part of the cycle. It means we're gearing up for a move similar to this. So I'll show you what it would look like. It's going to be something similar to a parabola. Let's see. Like this. Get out of here. Get the fuck out of here. Something like this. Where you're going to see NVIDIA get outperformed by Bitcoin. And you're going to see this chart start to round out and curl up and create this, something like this. Whoops. Something steep. This is what you're looking for to say, okay, that's cycle topped. Something of this nature, right? Where you get this blow off top. Similar, how do you get these ones where it goes straight parabola? So you're going to see this pair trade go like this. When you get up into here, right, this region here, this region over here, right, when you start to see this parabola take place, that's when you know the rotation is taking place into risk assets. So again, I'm paying attention to this saying, okay, we haven't seen that risk appetite take place in this cycle yet. We haven't seen the appetite to go straight down the risk curve take place. So when I see this chart start to bottom out, I'm saying, okay, well, 3 times in the past it's done this. 2 times it's called cycle tops. We get this move again, that's going to be a great indicator as to the rotation into risk assets. It hasn't happened yet. So I look at it and say, okay, well, what are the probabilities? What are the chances that this is actually cycle's done, or we had a prolonged cycle, just took a little bit longer than normal, but we're still going to get that blow off top that we're looking for. Which one is it going to be, right? Now, we don't necessarily know, but the probabilities say that this is what would happen, Okay, I'm just expecting that to happen. So this is giving me a lot of confidence still that the risk asset rotation hasn't taken place at all. So this would be, I would say, up in here is cycle top, right? Is when you get this blow off. Now, let's see here. At least cycle top for Bitcoin. For Bitcoin itself, cycle topped. Then the rotation into altcoins will take place, okay? But it's that move of capital down further down the risk curve. All right, let's look at the VIX. VIX is looking good. Getting nuked on the VIX. That's what we want, right? We want volatility to go down. It's been straight down for the past couple of weeks. Good. That means equities are going to start doing well, which you see they have been, right? And climbing up. So we need to see these equities keep climbing up. And then let's look at the DXY. Look at this. Look at this. Who could have foreseen this? Had this, again, drawn out for months now. Look at this. So we said DXY breakdown is bullish, right? The US dollar, the value goes down in comparison in our pair trade with our risk assets. Our risk assets go up in value compared to the dollar. So we had this blow off top here. We lost this demand zone. You see this big nuke. We come into this demand zone, which makes more sense on the daily because that's how I had it drawn. Yep, see? You come into this demand zone. We curl back up here. We lost it. We retest it. We come back down. Then we lose this demand zone. So now I get the pleasure of changing this to supply. See what happened? See how these prices interact beautifully with these levels that I'm drawing? I said breakdown is bullish. I drew this, right? It's going to come here, here, come all the way down. Look what happened. Who could have foreseen? Came down, came up, came all the way down. Looks like now we lost this demand zone. This is huge because this demand zone was the last line of defense for the US dollar. Look at this. So this was clearly a major level right here. This green box holding up all this market structure is a huge level because we've held this 1, 2, 3, 4, 5, 6, 7 times before it actually broke down. This time it's actually breaking down. Well, if we broke down, which you see we are, and we're rejecting, now this went from support, rejecting, turning it into resistance. Look at the line I had drawn from here. We're coming straight down. So you're going to see all this market structure is going to get lost. You're going to come down into here and then down into here, this demand zone right here. And this double bottom was cycle top from 17. This was cycle top in 2021. Confluence. Crypto topped out in December and January 2018, December 2017. Look where the DXY was. Confluence, perfect confluence, called the top for altcoins, right? Because if the DXY is nuking, people are rotating out of US dollars and buying risk assets with it because risk assets are going to appreciate against the dollar if the value of the dollar is going down. So double bottom here. What is this? Look, alt season was right in here. May, April, March of 2021. That was last cycle's top for Bitcoin. Perfect confluence. That's the area we're trying to head back into right now. Look at this. You get this bitch to come back down into here to this demand level with these ones. There's your blow off top on crypto. It's lining up. It's lining up for this to take place later this year and for it to be an incredibly bullish summer. It is. It's lining up beautifully. So it's patience. It's patience, gentlemen. It's patience. It's understanding the data. It's understanding that I'm only going to do what makes sense mathematically, what makes sense from a money perspective. I'm not going based off of feeling. I'm not going based off of emotion. I'm looking at the charts and saying, what does the chart tell me? What are the probabilities? I'm going to make the correct decision based upon the probabilities. This is what it's telling me. Telling me more bullish than bearish this year. So those are the things that we're looking at. But what's to be really excited about is where we're at on coins like Pepe, Brett, Andy, and Wolf, because again, all I had to do was show you the levels on Pepe. If you want to see the take profits, the fib levels, the market cap targets on the boys club, well then join the Discord. Join the private Discord. It's the Taylor's code inside the description. Links in the description. But this is oh look, the housekeeping's here. You're fine. Yeah, come in. You're good. Yeah, go ahead. You're fine. Yeah, go ahead. You're fine. So, but yeah, so that's my cue, gentlemen. All right, so I'm out of here. If you're not inside the Discord already, join up. Make sure you're inside the network, and let's go make some money. Let's make some fucking money this cycle. All right, so let's do a little Mr. Producer. Got all them hoes. All right, ladies and gentlemen, peace.